Hello everybody, it's Andrew Pancholi with an updated briefing on the 19th of March 2020 after the close of the markets. Several of you contacted me and asked if I could just do an update after the last turning point. So let's have a look at some things. I'm going to go into a bit more detail on a few bits and pieces. Once again, watch this video in conjunction with the one I believe that was done on the 9th of March, which has got the long-term cycles and the long-term resistance levels in. So having a look at the S&P 500 and taking the move up from the global financial crisis up to here, we talked about this being the first port of call around about 2,350 on the S&P 500 index. We've hit that. We went through it. We're on our turning point date. Well, that was 2 days ago, really, the turning point date, and the 382 level, this move has been so impulsive, it's almost certainly going to get down to here at this point and probably lower. Key point to remember, for those of you who've done the trading course, you'll know this, you take half of that for a significant level, that price, you can call that arbitrarily 3,400. 1,700 would be a very important level. It would be the 50% level of the all-time high. It would also be the 61.8% level of here. I think that has to be a potential point at some point. I don't know whether it's going to be days, weeks or months. We did want to see this hold and look for some sort of bounce off here. So far we haven't seen much of a reaction. I've also popped in again, the trading course members will know how to use this, and this is a significant level here. So that's what we're looking at right now. Now, we talked about this turning point on the 17th of March, which was in the latest edition of the report. There are further turning points coming up. Let's have a closer look and see what happened. Whilst we didn't get a bounce on the 17th, or we've had very small bounces here, we're on the June futures, E-mini futures for the S&P 500. The 17th came in here and we got a test here. So we got to this level, 2350 is the level, 2351 on the cash, a couple of points out on the futures. And you can see what happened here is that we've now held this. With the rate of decline has been arrested here. We haven't, trading course members, again, you'll know what to look for here. We haven't got any proof of that yet. So that trend is pretty much intact to the downside. It's just been arrested around this turning point date. So what does this tell us? Very important for all our readers and course members, that basically we've got to a significant turning point. You know what I wrote about that. That was a significant turning point on the 17th. And all we've done is arrested the rate of descent. Now, that means that we're not seeing a reversal yet. It's quite possible intervention failed on Sunday night. So remember, I'm in the UK, so Sunday night for me. Just had a very, very minor effect there. Well, actually, that was it there, wasn't it? And then it just came straight back off again, and it didn't crack this trend here. So we are holding around about this level. We are running out of downward momentum for the moment. I do think we will head lower, as I say. And a very important point, again, for followers of my work, we've been talking about the 90-year cycle from the 1929 crash. I do think this is a very big, well, it's pretty evident now that we are going to head not just into a recession, but probably a depression. But this, we will get, it's undoubtedly a fact that we're going to get a bear market rally at some point. So just be aware of that. Remember, we're trading the chart pattern each time. So basically what I'm really saying is we got to 2350, which was a 0.382 Fibonacci move. We could go a little bit lower looking at the pitchfork I showed you, and that was on a turning point date. And all that turning point date did was arrest the rate of descent for a while. It hasn't actually reversed it. Now, next up is I've just brought in the cash Dow and taken this low here from 2009, and what we found is that this has actually been weaker. We have actually exceeded the 382 level there. In fact, let me just move that over to this side here. The 61 point, we'll just flip those over like that. The 38.2% level, 20,800 was taken out quite quickly, and we've almost got to the 50% level there. So that is very significant. The 50% level would also tie up with these old highs here, and if the Dow got down there, that there would certainly be a reasonable degree of support there. So that's a good point to note there. But also, again, using our bits and pieces from the course, what we have found is that this really has pretty much captured it. We've gone through it a little bit, and we are now tonight we've gone back through that. So that suggests a degree of support coming in there. Now, the Nasdaq 100 we don't usually cover per se, but I do like to have a look at it every now and then. And here's something very interesting. So the Dow got to nearly the 50% level. The S&P has been through the 38.2% level, but the Nasdaq hasn't yet reached this level, showing a degree of resilience compared to the other two markets. So relative strength on the Nasdaq is stronger. I mean, we've still seen this huge waterfall decline here. But just bear that in mind. So the Nasdaq and the tech stocks seem to be a little bit stronger. So what we're looking forward to the next set of dates. We have got a significant point coming up in April, and that is worth. I think we'll see a significant reversal then, but I'm looking for something before then as well. The April date I'm just working on now and fine-tuning it, and we'll put that in the next report. Now, here's something that I've been looking at, which is quite interesting, and this is the 1929 overlay here. We're talking about the 90-year cycle. We should look at that, and we've come down, popped up, made this crash. Then we popped up. Now, I don't know where we are pattern-wise, whether we're sort of around this area. We're looking for this pop, and then coming down to make a further low. Now, if you remember that pitchfork I just showed you a moment ago on the S&P 500, that's the sort of pattern that could perhaps just bring in that pitchfork before it pops up a bit. So it's a very difficult play to call. And let's just go over to where we are now. You can see we came down, came back up, and we've just come down. So we haven't got the pop up yet and a further move down. I don't know if that's going to happen. I just want to share that pattern with you. And obviously, everything that you do with ourselves is there to that you make this learning your own, especially if you're on the trading course. And so I just want to show you these patterns and get you looking out for that sort of information. Now let's move on to crude oil. This is the chart that we were looking at in the last but one video, and we were looking at this area here holding. It hasn't held. So what do we do? Let's look at some options. So basically we need to bring some other lines. The logical line to look at really is this 50%, so that we can project it further down, and we get a degree of confirmation there. Now let's just extend that left, and again this is more tutorial stuff for those of you on the course. Just continue the learning, and as we go further back we can find it is bringing in some pretty good stuff there. But let's go all the way back here, and we see the following. So by extending this line all the way back, not only is it picking up these points, we see it picks up this point exactly here, and it's pretty good here. So we know there's a degree of validity with these lines here. So I've replicated this line down here, taking this same distance. It's basically the halfway point between these here. Again, you'll know all about how to do that in the course. And this would be a potential target, which is all the way down at $15. That is a serious target if things get worse. And let's face it, things aren't looking that great. Again, the validity of that line proven there quite nicely as we head all the way back and further. So that is a pretty good line. Not good news really. I think we are seeing a little bit of a pop up. I'm not saying it's going to get there right now. And again, just a point for the course members, that's the impulse move you should be looking for some of the other techniques. So that's crude oil there. I did get a question on airline stocks. As we wrote this on, this was from the February edition, published on the 1st of February, where I was explaining the virus cycle. So this is before the COVID-19 really took hold. I think you now are familiar with these cycles, but from previous videos. But just As we said, when SARS came in 18 and a half years ago, it was devastating for the airlines because basically people were afraid of spreading the virus through that. Exactly what's going on. This is an exact replication of what happened in the 18.6-year cycle. Published as on the 1st of February, as I say, airline stocks collapsed in Asia and globally. Remember, only months earlier, the 18.6-year cycle, the 9/11 attacks had taken place and airlines were already suffering. So airlines were badly hit, and let's just take a look and see what's going on. So here's a daily chart of American Airlines. The newsletter came out there. That was published there. It did pop up a little bit, made a high there just shy of $31, and now it's trading at $10. So it's lost 2/3 of its value. That's American Airlines. Delta, very similar situation. Weekly charts that was published here. That there was trading at $60, trading now at just around about 22, 21, 20. So again, lost 2/3 of its value. And for those of you in Europe, IAG, International Consolidated Airlines Group, owns two of the big carriers, flag carriers in Europe. Basically trading all the way up here at 680 there. Just that was the day the report came out, just there, down at 215. So that's actually lost more than 2/3. Potential target down here. Or actually there's one other take on that, which is these lines here that we have it that there. So again, that's just for the benefit, of course, members. So that's what we're looking at. Not good for airline stocks. They're not going to recover overnight. Yes, President Trump is putting in, offering $50 billion support to the US carriers. It remains to be seen what happens in Europe. So I hope you found that update useful, and find out more at markettimingreport.com. Thank you very much.